gentlemen, welcome back to the channel. In today's episode, we're going to talk specifically Tesla stock, this market, what's ahead. I do have some clips from CNBC I want to share with you, and I want to give you guys a bit of a timeline on what I'm expecting here for this market this week. You know, I was not super bullish heading into today, although futures last night looked pretty good. It's the second half of this week that really holds the promise for a bit of a reversal in this market. So work is cut out for us. Stocks, kind of crashed today. Hit that like button as well as subscribe to the channel if you have not done so already, and let's get started. So first and foremost, I want to explain this as simply as I possibly can, okay? This market is panicking, okay? Should you panic? Well, no. Typically, you shouldn't panic, okay? Why is the market panicking? Uncertainty. There's a lot of it out there. How is the economy doing? What is the Fed going to do? How is the holiday season going to be? What's going to happen with AI? There's a lot of uncertainty. Everywhere you look, there's uncertainty from a Wall Street perspective. Here's what I know. I know AI is alive and well, and it's not a bubble. I know the consumer is consumering. Okay? There's likely not a lot of a change out there actually happening. But Wall Street believes we're headed into a recession. Here's the problem. Uncertainty is the problem. Uncertainty is the destroyer of markets, the causer of corrections. Now, this week, we're going to start getting a lot more certainty, okay? But it does not start until Wednesday in after hours. So, unfortunately, today, Monday, tomorrow, even Wednesday during the day could be a little bit dicey. Now, I think from just a tactical perspective, following today's carnage, you are probably going to see a better day tomorrow. Is that a guarantee? Obviously not. Maybe tomorrow is a bad day as well. But, you know, you're starting to get to pretty overstretched levels to the downside, right? Retail investors, long been margin called at this point, okay? A lot of your AI stocks are down 60+%. You know, even in Oracle's down almost 40% from its recent highs, let alone that small cap AI stock that nobody even knows about, okay? They're being attacked. And that's fine when there's this much uncertainty. When there's this much uncertainty, who's to say, you know, that small cap shouldn't be down 60%? There's uncertainty. You just don't know, okay? Even Bitcoin. Look at Bitcoin here. Down 27% from recent highs. Now, let me give you a little bit of a run through on what's going to be happening this week, okay? One part is earnings, one part is economic data. So you're going to get a bunch of Fed speakers this week. You're going to get some smaller sets of economic data we'll get into in just a moment. But tomorrow morning, you have Home Depot earnings. That's not going to save this market. That's not enough of the consumer to tell you a whole lot. That's more construction, right? Wednesday pre-market, you have Target, TJX, and Lowe's. Could they, you know, have a positive impact on markets? Potentially, but Walmart's the big guy Thursday pre-market, okay? Now, I'm willing to bet that Walmart does not give some kind of dire recession warning like they did in 2007. If they do, and Walmart starts cutting guidance, that's going to be an issue. Stocks are going to react to that. Then the question is, how much have we already priced that in? Wall Street is already growing to, you know, expect or price in a recession. So, you know, do we price in more of a recession chance following Walmart earnings or less? We'll have to see. But I would argue that there's so much fear already out there that you probably start to price in less of a recession fear following Walmart earnings. They're probably going to tell you things are kind of the same as they were last quarter. Now, if Walmart says, nope, in the last quarter things have got much worse, like that's where the issue comes about in markets. Now, big dog Nvidia reports Wednesday and after hours. Okay, Nvidia already told you what they're going to say 5 weeks ago. Jensen Huang said demand for AI computing has gone up substantially in the last 6 months. Okay, they already told you. This should not be a shocker to anyone when Jensen Huang comes out and sounds like a rock star around AI. Okay, and that's exactly what's going to happen. Okay. He said specifically demand for Blackwell is really, really high. He said of NVIDIA's most advanced graphics processing unit, I think we're at the beginning of a new build out, beginning of a new industrial revolution. Okay. Hello. That's what he's going to say this time around. So what's going to happen after NVIDIA earnings? Well, there's going to be more certainty in this market. Look at today. Russell 2000 down 1.3%, NASDAQ down 1%, even the Dow is down 1%, S&P down 1%, VIX up 13%. Okay, you're starting to get to pretty fearful levels here. While it could get worse, this is typically around the point where you start to see corrections fade. You have already technically seen a correction in this market. Okay, if you look at the S&P, okay, S&P at this point from its prior high is now down about 3.5%. From the low was down about 4.1%. Look at the NASDAQ, okay? NASDAQ from its recent high is down 5.5%. You've already seen a correction here, okay? IWM, nastier. From its recent high, down almost 8%. And this is just on an index level. Things are a lot worse on a single stock basis. But again, when you're accumulating this much fear, when the VIX is this high, you have to see things get worse. If they don't get worse, or uncertainty does not continue to rise, you're likely going to see a rally in markets. Okay, that's just how things work. Uncertainty is the biggest negative driver for markets. Markets are really good at handling bad news. They're really good at handling bad news. They're really bad at handling uncertainty, and everywhere you look, there's uncertainty. Again, how's the economy doing? What's the Fed going to do? What's happening with AI? So on and so forth. Okay? NVIDIA is going to tell us things are great. Walmart's going to tell us things are not as bad as expected. And we do get the September jobs report Thursday morning. While that's not October, that's going to give us a little bit of a clearer direction of this economy from a Wall Street perspective. Now, I think credit card companies and banks are most important to look at. And banks and credit card companies in this last earnings season, they're the first ones to report in the earnings season, so they're over, said consumers largely unchanged. They're still spending. Things are fine. That's what they said. Wall Street has short-term memory loss. They forgot all of that. They need to be reminded again. I'm just telling you what we're about to see, okay? And it's going to sound a lot better than what the markets are currently pricing in. But that does not start until really Wednesday pre-market with Target and TJX earnings as well as Lowe's, but not really until Wednesday and after hours with NVIDIA. And then Walmart Thursday morning, and then the economic data Thursday morning. So I'm much more bullish on markets in the second half of this week than the first half of this week. Now, with that said, again, you're getting markets that are, getting to a point of being super stressed, okay? The CNN Fear and Greed Index is at 15, okay? It's at 15. This is one of the lowest points we've ever seen this thing, okay? All of your index components are in extreme fear besides market volatility, and that is about to hit extreme fear, okay? So normally you should be buying a market that is this fearful. Percent of stocks trading above their 50-day moving average. Let's refresh this. 35.8%. Deep in correction territory already. Okay, and then obviously the AI Investor Sentiment Survey shows a 17% difference between bearish and bullish investors. Bearish investors at 49.1%, bullish investors at 31.6%. That is a clear indicator. Anytime you've been this bearish, you want to be buying this market. Specifically for Tesla stock, Tesla was a big relative outperformer today, but again, the second half of this week, I think, gets a lot better. I think you see volatility come down a little bit as certainty starts to, things become a little bit more certain, right? And I think what you're seeing today is largely just anticipation of what NVIDIA could say, what Walmart could say. The uncertainty is growing. It's kind of like, again, in the example I shared at the onset of this video, you're walking up to the house right now to meet your wife that said, we need to talk, and didn't respond to you for 6 hours, okay? You're in the stage of you're walking up to the house right now, okay? Just to put this into analogy sense. And, I'm not super shocked with what we're seeing. Although futures last night looked really good, and that does suck to see, futures look really good and then the markets to open so bad. But we're not surprised by this by any means either. Now, there's a couple of clips I want to share with you just briefly, like, a minute in one, 2 minutes in another. This one says the outlook is fairly bleak for retailers, Q3 earnings, says Bernstein. Take a listen to this.
Like Walmart, Home Depot, and Target, as you can see there, are scheduled to report their earnings throughout the course of the week as investors continue to gauge the state of the consumer. Our next guest says the outlook is bleak going into the holiday season as rising inflation weighs on the consumer health, with low-income consumers getting squeezed the absolute most. For more, let's bring in Jihan Ma, the senior analyst over at Bernstein, who covers many of these retailers. Jihan, thank you very much for being here. Let's talk, first of all, about why you are so negative or pessimistic about some of these retail names heading into this all-important holiday shopping season.
Yeah, I would say, first of all, I would probably call it cautious rather than outright negative, because there's reasons to be hopeful for next year. But if we just focus on this year between now and year end, I mean, while you've got inflation still going up on the back of tariff-driven cost increases, labor market appears to be softening. The low-income consumers are in particularly the worst shape right now on the back of the lower spending power they have, as well as the government shutdown that temporarily at least delayed SNAP payment. On the top of that, we're lapping a pretty strong holiday season, especially from a discretionary sales perspective from last year. So unfortunately, I don't have too much good news to report in the very near term.
All right. So
see, this is a retail analyst that is scared of retail earnings heading into them. Like, they don't even know. They're uncertain as hell. Now, take a listen to this article that says we're not in an AI bubble, says JP Morgan's Bob Michelle.
Michael's here. You want to get in on the action of this conversation? He's like, why did I even come here this morning? By the way, Bob is the Chief Investment Officer and Head of Global Fixed Income, Currency, and Commodities Group at JP Morgan Asset Management, where he oversees, you ready for this, $800 billion, folks. That's a lot of money.
It is a lot of money.
So where do you think we are in this cycle?
Started it over $1 trillion, but no.
No, we're almost $1 trillion.
Yeah.
I'm going to be the professional optimist today and say we're in a pretty good place. The U.S. economy is gliding into year end in a pretty good environment right now. Corporate America seems to have absorbed the tariffs pretty well. The consumer's doing pretty well. We do expect the Fed to come in and cut rates in December. That would be a nice tailwind as we head into 2026. And the One Big Beautiful Bill Act hits.
All right. Okay, here's a timing question, though. And I've been talking all the morning about this study that I looked at, a chart, actually came out of JP Morgan, one of your analysts had put together, showing if you put money into the market at, I think it was 23 or 24 times price to earnings ratio, historically, 10 years later, you'd look back and you'd say that you only were really benefiting in terms of I think it was up 2% on an annualized basis, your return, or down 2%. It was somewhere in the, it was one of those scatter charts? Have you ever seen
Sure,
those?
yeah, the scanograms.
Yeah, so the question is where we are right now in the cycle. If you were to put money in the market today, whether in an index or something else, and then you and I were to go and have breakfast together in a decade from now.
I think you're going to look pretty good. I think you have to appreciate that there are some secular changes underway. Technology, of course, is a big one. You have to look at demographics. The 1991 births are now the largest demographic. They're 34 years old. They're dominating earning, spending, and saving. You've got, I think, a pretty stimulative macro environment. On the fiscal side, pretty much every government is borrowing and spending. And in the U.S., you've got easing central bank accommodation and probably some regulatory tailwinds as well.
So we've got NVIDIA coming up this week. That seems to be like, the thing everybody's focused on. Would you be doubling down on the Mag 7 or the Mag 10 or whatever you want to call it, or would you be doing something else?
Tough question, but I think you have to look at where the money's going. And right now, every company we talk to, and we extend a lot of credit into the system, everyone's gearing up for CapEx next year. Right. They're looking to ramp up some hiring. They're looking to build out whatever they're doing in AI. They see the effectiveness of it. They want to spend in that area. And of course, they're going to spend at the biggest producers in that space.
Do you worry about the credit issues that you said extending credit into the market and given the CapEx spending? There is a question about CapEx spending and whether it's actually too much in this space, given the economics of the folks who ultimately are going to have to pay for it.
I think this is one instance where you can look back at the dot-com era and recognize that a lot of money will be spent in areas that will be fruitless, and a lot of money will be spent in areas that will bear fruit.
Right, but so what's the lesson, though, of the dot? We go back to 1997, 8, 9. What is the lesson of what an investor is supposed to be doing if that is the corollary?
The lesson of the dot-com is there was a bubble, it burst. We don't think we're in one now for AI, but companies didn't stop spending on Wi-Fi, the internet, and technology. Can you imagine if every company out there said, right, I told you so. Look at stock valuations. They're down. I'm not going to invest in this. It's a hoax. Ridiculous.
Okay. Now, again, the Russell was down about 2% today. Wall Street is scared. They're terrified. The uncertainty is out of this world from a Wall Street perspective. You're getting very close to a bottom, okay? Very, very close. And I think that happens this week, okay? I'm not a financial advisor. I'm not a financial planner. Like, you should be mentally prepared, and your portfolio should be prepared for this to continue for a while and to not have a bottom. But the odds are rising dramatically that this is, or we are getting close to a bottom in this market. It's time to do some buying, guys. It's time to really start to put some capital to work here, okay? It's going to be really hard to sustain these levels of fear for too long. So that's what I'm doing. That's what we are doing in the trading community. If you guys want to come join us, check that link out down below in the description of today's episode. Again, keep in mind, Monday and Tuesday, even parts of Wednesday, little bit of a wild card. My certainty on this market doing better is really in the back half of this week, right? That's where I see things getting much better and where I see the fear misplaced. The fear around AI is misplaced, 100% in my opinion, right? This is not a bubble. We're not at the end stages of AI. Like let's be real with ourselves here, okay? That's misplaced. I think, as JP Morgan said, that this economy is gliding. It's not really like crashing into a recession as Wall Street is currently expecting. That's good news. JP Morgan says the Fed's going to cut rates in December. That could be the case. And at this point, that would mean, good things for certain areas of this market as well. So, again, let me know your thoughts on this down below in the comment section. I know there's a lot of fear out there. People are terrified. I get it. This is like the 15th, 20th time I've experienced this in my investing career here. You get these moments that pass, okay? The fear is always worse than the actual outcome, 9 times out of 10. April was a little different. The fear of Liberation Day was not quite as bad as the actual outcome. But besides that, even like COVID, right? The fear was a lot worse than what actually happened. Companies did fine. Now, again, for something like Tesla has been outperforming this market on a relative basis compared to other AI stocks, and I think that's going to continue. I think Tesla's stock is going to have a very strong year-end rally. I think this market's going to have a very strong year-end rally, okay? And I think those of you guys that are out buying in this market are the ones that are really going to excel in the next 6 weeks or so. And I do think by the end of this week, you're going to see Tesla stock closer to that 450 level versus the 350 level, if you will. And that's the bet that I'm willing to make at this current moment in time. I see this fear as really misplaced in markets. From a structural perspective, nothing has changed, okay? Just the uncertainty and the fear has changed, okay? The sentiment has changed. And I see a lot of people that are getting bearish out there. And what does Warren Buffett say? Be fearful when others are greedy. Be greedy when others are fearful. This is the time to be greedy because people are fearful. They're basically shitting in their own pants right now, okay? Don't be the guy that lets emotions lead them, okay? Come to your narratives, come to your theses, and until something changes those, you should not be deterred. And nothing has changed my thesis on Tesla. Nothing has changed my thesis on AI. Nothing has changed my thesis on a year-end rally. The only thing that's changed is uncertainty has risen, and I view the uncertainty as likely collapsing by the end of this week, which from a tactical perspective, will be bullish for stocks. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.